Hey everybody, how's it going? Hopefully you're having a good weekend right before Christmas. So today we're going to be taking a look at two stocks. Two of them are both space stocks, Rocket Lab and ASTS. So these two are some of my favorite stocks to own going into this next decade. I think they have both very, very excellent potential. They are both space stocks, but they're very, very different in how they do their business, right? Their business model is completely different. Rocket Lab is a end-to-end space company, so they have rockets and they are sending satellites to space, all that kind of stuff, helping companies manage their constellations. And ASTS is a company that is focusing on 5G networks through satellites in low Earth orbit. So these are both very unique companies, very new, right? They're still in their growth phase, and they have a lot of potential and lots of milestones to hit by 2027. Buying stocks of publicly traded companies is fantastic, but you know what else is great? Owning your own company. That's where today's sponsor, Limits Express, comes in. They will completely manage an Amazon store just for you, where you can sell products like Colgate's toothpaste, Crest mouthwash, Dove soap. In order to buy these products for a bulk discount for very cheap prices, they have to spend more than $750,000 a month with these suppliers. And that's where you and 150 other clients come in to pool your money and to buy these products at a very cheap rate to sell at a higher rate. The key thing is Limits Express doesn't make any money unless you do. You supply the capital for the inventory and they do all the heavy lifting, and you get to share the profits together. So I would never take a sponsorship from a business I don't believe in. And Amazon FBA is a completely viable strategy. And thing is, Limits Express has a team dedicated with experience to help you start your own Amazon store. So if you're interested in starting your own Amazon store and making passive income, use the link below to book a 30-minute Zoom call with their co-founder, Kyle. And you can also check out their website down below. So we're going to take a look. So here ASTS is first. Basically, both of these companies are going to report positive EPS in 2027. And that's what analysts believe will happen. So this is what is projected to happen with their earnings per share. So positive earnings per share is really important for these growth companies. It shows that they are able to, show their path to profitability and return equity to shareholders. They are managing their balance sheet and their earnings well. All that kind of stuff is really important. So ASTS is basically pre-revenue, right? They have contracts signed, but they're not actually producing revenue now. But you can see that it's a huge jump, right? Once this starts ramping up, once they're actually tapping into this customer base through their cellular providers, then it's going to be a really, really large jump in their top line revenue growth. So this is obviously going to be really important, and we can see that a lot of it happens into 2027, right? 2026, we're going to start seeing some, big milestones hit, but 2027 is when the numbers really start to solidify. And this is all according to schedule so far. Nothing has really changed, and analysts are predicting this, which means that, they're giving pretty good price targets for AST SpaceMobile. So let's also take a look at Rocket Lab. So Rocket Lab is very similar in that they're going to be positive in their EPS for 2027. So keep in mind, we're going into 2025, and this is just 2 years later. So it's going to be a huge shift for their companies if they can, achieve this positive EPS, grow their balance sheet, grow their revenue, and really ramp up that growth. That means that these companies are going to grow a lot. So Rocket Lab still has a lot to catch up with their analyst predictions, but honestly, if you're looking into investing in a company, looking at these analyst price targets is not the determining factor that you should look at. Because what a lot of analysts do is when they see a stock price go up in a quality company, they just start raising their prices with other analysts, right? Or else they'll look really silly if they have a $12, $5 price target and the price is already in the 30s. So this is just kind of a self-fulfilling prophecy for this, this kind of analyst projections. But it's always important to look at. There are some really good analysts that will analyze the business, and you can get a lot of good information from that. But just a little something to think about. When people were buying Nvidia stock before AI really ramped up, they were buying it because of their GPUs, right? Because they're a leader in gaming and all that. So people had no idea that their products would be so useful when it came to AI processing. So, some people might have known, some people might have had a guess, right? But it was not reflected in the stock price. It was not reflected in any of the analysts' estimates, anything like that. So it completely caught people by surprise. But it's just because this company was continuing to grow, execute well, do their R&D, and they were able to innovate and really take advantage of the opportunities that came, right? So this is exactly the same thing that we could possibly see with Rocket Lab and ASTS. These are two quality companies they're going into a completely new market, right? Space is a completely new area that has not been fully explored, not fully developed. And when I mean explore, I don't mean like going to different planets. I mean like the applications that can be used to make money, right? So obviously there's a huge potential for these companies just in the nature of what business they're in. So as long as they continue researching, developing, reinvesting in themselves and growing, focusing on the basics, of course, growing to profitability, increasing the revenue, right? Those are the basics. But with companies like this, you really have to see the story as well, right? What do they bring to the table? What do they do to innovate? And these two companies are really innovative, and they both solve problems for different companies and for a lot of humans. So just to conclude, the stock market is a forward-looking tool, right? We always say that, and it's very obvious that we are looking forward to the future with these companies because of this run-up. People say that the market is priced in, right? It's always priced in, and that's not always true. But at this point, you can see that it's pricing in a lot of growth for these companies. So that's why it's run up just such an incredible amount. The thing with these companies is they haven't really started ramping their revenue or their EPS growth. So once that does happen, we have a better understanding of their growth rates, of what to expect with yearly growth, and what we can expect their revenues to be and their EPS. But once we do have that, I am willing to bet that these companies will be much higher than where they are now. And eventually, 10, 20, 30 years later, when we look at this graph, we're going to zoom out, and this whole area is going to be flat, and we're going to be all the way up here. So obviously, that's if a lot of things go right for these two companies. And I'm talking about them, pretty interchangeably right now, but they are very different. But I do feel the same way about both of them because they are both very unique and special companies. So obviously, if any fundamentals go wrong, if anything in management really takes a nosedive, then it's not going to be worth the bet. But with how things are going, with how they are executing and doing what they need to do to improve, then I just continue to feel confident in these companies, and I don't plan on selling. I think that finding these kind of opportunities are really rare, and when you do find them, you better be in a good position to take advantage of it, right? You obviously don't want to put all your money into it so that if it does go wrong, then it really makes you suffer. But you should be really well prepared to take advantage of any great opportunities that you can find. So for me, for these two companies, I will not be purchasing shares. At this point, I'm going to be selling cash secured puts because I want to get paid to buy their shares, and their premiums are really nice. And obviously, if I get a sign, then I can just, sell covered calls, and that will protect me from, because we've run up so much. I really don't mind if we do cool off a little bit. So that will definitely help hedge against any potential cooling off. And if there are opportunities to buy, then I will buy. And if it keeps running, then I'll be happy because I already have a position in these companies. So, whatever happens, as long as the companies continue executing and improving, then I'm going to be happy no matter what. So hopefully you guys enjoyed the video. If you did, please leave a thumbs up and subscribe. And I'll see you guys next time. Bye.